When it comes to investing, one of the most responsible things an investor can do is examine both the bullish and bearish perspectives surrounding a stock. While optimism often drives enthusiasm, it is the consideration of risk that helps protect gains and prevent poor decisions. In today's video, we are going to focus on the concerns raised by a market commentator who believes Palantir Technologies might not live up to expectations in its next earnings report. Now, I want to be clear that I personally do not agree with many of his conclusions. However, I still think it is crucial that investors understand both sides of the discussion before deciding what to do with their money. Palantir Technologies is approaching a key moment, with its upcoming earnings report scheduled for August 4th. These quarterly updates are essential because they provide one of the few times each year when investors can see detailed figures and commentary directly from the company. This information is incredibly important because outside of sudden breaking news or large business developments, earnings reports are the primary source of truth for understanding how a company is doing. As we head into this important event, expectations for Palantir are running high. Investors are looking for strong results that can support the company's dramatic stock performance in recent months. At the core of Palantir's business is its software, which blends artificial intelligence with data analytics. Although the use of artificial intelligence may sound like a recent trend, Palantir has actually been doing this for more than 20 years. The company initially built tools for government agencies, giving users the ability to process huge amounts of data and gain actionable insights. Over the years, its software has been credited with many accomplishments, including helping track down the final hiding location of Osama bin Laden. Once Palantir established a strong foundation with government clients, it began expanding into the commercial sector. This move has proven to be a smart one, and Palantir's commercial customer base continues to grow. However, government contracts still contribute the largest portion of its overall revenue. In Q1, Palantir generated $487 million from its government clients, while its commercial side brought in $397 million. These figures show that the public sector remains the company's financial backbone. Despite the dominance of government contracts, growth in that segment has not been sluggish. In fact, during Q1, government revenue increased by 45%. By comparison, commercial revenue grew by 33%. This stronger government growth is mostly due to slow adoption of artificial intelligence in international commercial markets. Many regions outside the United States, especially in Europe, have been slower to adopt artificial intelligence tools, which has held back Palantir's commercial momentum in those areas. Palantir's commercial revenue in the United States surged by 71% in Q1, reaching $255 million. This number highlights the significant demand for Palantir's technology among American businesses. With this in mind, a key area for investors to focus on in the upcoming Q2 earnings report will be how commercial artificial intelligence adoption is progressing overseas. If international markets begin catching up to the United States, that could trigger renewed confidence in Palantir's long-term growth prospects and potentially lead to a favorable stock reaction. However, even if the earnings report brings good news, there are reasons to be cautious. The biggest concern is the huge gap between Palantir's stock price growth and its actual business performance. Since the beginning of 2024, the stock has risen by more than 800%. This rise is extraordinary, but when we look at the company's revenue growth from Q1, which came in at 39%, it becomes clear that the stock is far outpacing the business. This type of disconnect is often a red flag for investors. Right now, the company's stock appears to be trading based on future hopes rather than present realities. Palantir's valuation is sitting at more than 125 times sales. To put this in perspective, companies that trade at such high valuations usually deliver explosive revenue growth, often doubling or tripling to their revenue each year. But Palantir's current growth rate does not match that level. The numbers simply do not line up. To make matters even more clear, let us compare Palantir to Nvidia, which has been one of the fastest growing companies in the world in recent years. At its peak, Nvidia's revenue growth reached a staggering 265%. Yet even then, Nvidia never traded at more than 46 times sales. So here we have Palantir growing far slower than Nvidia ever did, yet trading at nearly 3 times Nvidia's peak valuation. This comparison should make investors pause and think about whether Palantir's stock has run too far ahead of the actual business. Looking ahead to Q2, Palantir is expecting revenue growth of 38%. While this number is solid, it is not enough to justify a valuation that exceeds 125 times sales. For Palantir to support this kind of price tag, it will need to exceed its own internal expectations by several percentage points. That is a tall order, and if the company fails to deliver on this, we could see the stock take a hit. Even more concerning is the possibility that Palantir's stock could decline even if the company beats its revenue guidance. When a stock is priced for perfection, any result that is not exceptional can lead to disappointment. Investors who are paying a premium expect not just good news, but outstanding results. If Palantir delivers only what is expected, or just slightly more, the market may still react negatively. While the company does have strong technology and important clients, its stock price has moved into territory that is difficult to justify with current financial performance. That makes this a risky moment for investors. While the stock might rise further after the earnings report, that move would likely be driven by hype or market momentum rather than by solid underlying fundamentals. In other words, the excitement around Palantir is getting far ahead of where the actual business stands. Essentially, Palantir Technologies is set to report its quarterly earnings on August 4th, and although expectations are high, some analysts are raising concerns about a possible disconnect between the company's stock performance and its actual business growth. While Palantir has seen impressive gains in both its government and commercial segments, especially within the United States, where commercial revenue rose by over 70% in Q1, its overall revenue growth of 39% does not appear to justify its stock's rise of more than 800% since the start of 2024. The stock is now trading at a valuation of more than 125 times sales, which is much higher than companies like Nvidia ever reached, even when delivering far greater growth. This has created a situation where even a solid earnings report may not be enough to support the current share price, especially if international commercial adoption of artificial intelligence continues to lag. If Palantir fails to exceed growth expectations, the stock could face a sharp drop due to the enormous expectations already priced in. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.